Grummit. I'm from APRA. I look after a team of specialist supervisors in APRA looking at credit and operational risk, IT risk, governance matters, so that kind of group of people. I've got a couple of slides, but actually I'm really just want to talk about 4 questions. So the 4 questions were, what does APRA do? Why do we do it? A little bit on how we do it, and then sort of finish up with a few thoughts on what I think that might mean for the people in this audience, but we'll kind of see how it plays out. So firstly, what does APRA do? Well, obviously it's in the name. So we do Prudential Supervision. The goal of Prudential Supervision is basically to ensure that regulated entities, or APRA regulated entities, have a much higher degree of resilience to financial stress and operational resilience than normal companies in the economy. So that really means a much lower incidence of failure. Why we do that? Well, jurisdictions all around the world, and Australia included, have basically decided that there are some businesses, because of the nature of the business, that the impact of failure is such that you actually want to impose what is a fairly rigorous and costly set of additional requirements so that you reduce that probability of failure. So that's kind of what we're about. How we actually go about doing that is we have sort of a 2-pronged attack. So the first attack is a set of additional requirements. So these requirements cover really things about what does good risk management look like. And then there's also a set of requirements around the financial resources that APRA-regulated entities need to have. Those financial resources are about capital adequacy and also how much liquidity you need to have. Somewhat tailored for each industry, but that's the heart of it. Then the second prong is really around supervision. So most of APRA's people are involved in supervision, very intensive supervision of entities to make sure that they are in fact living up to those requirements that we've put in place. So kind of what does that mean for the people in this room, or potentially for you? So the first thing to note is that the APRA-regulated perimeter, and Mark touched on this in his introduction, is really, really very small. So of the, hundreds of thousands of companies in Australia, and presumably tens of thousands of finance companies, there's about 600 which get regulated by APRA. So we suspect, and certainly the way it's playing out just at the moment, but it's clearly early days, is that most developments in this area aren't actually going to directly be subject to APRA regulation. What you will find, though, is to the extent that you partner with APRA-regulated institutions, you may find that some of the negotiations with them are actually influenced by APRA's requirements placed on those regulated institutions. So that's kind of the first impact. I think the other thing is sort of strategically APRA's approach at this point in time is we have really no idea how this is going to play out, and I actually say that in what I think is a positive sense. So we have no idea, but we also have no preconceptions. We try, and I believe we do, on the whole, take a principles-based approach. And so we're looking at things on a case-by-case basis as they appear, as they come to us. I think the sort of third thing I wanted to mention was we do actually have some discretions in the way that we apply our rules. So we don't really have discretion about if you fall within the APRA perimeter. We can't really say, well, we just won't worry about it. But in terms of the rules that APRA actually imposes, we do have an ability to customise those rules, particularly where those rules have been written with a different type of institution in mind. So to customise them to the particular circumstance, and we use those rules reasonably frequently. with regard to normal APRA regulated institutions, and you could imagine this would be an area where we'd be using those rules more. I think the final thing we wanted to say was kind of echoing Tony's approach. We have no preconceived notions. We're very keen to engage, and it's going to be really interesting to see how this develops over the next few years.